following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Was kind of checking out the BOJ stimulus on the Japanese economy. And we're going to get into that yen trade in just a second. Hope you guys are doing well. Looking at the S&Ps, guys, this is the first time, I like how this reversal pattern has kind of happened. We talked about this possibility yesterday. Talked about, again, 2169, 2170 being a big number here. And that didn't hold. We got the daily close below, and then we got the retest here. So it looks like we're really in store for at least 2152 now. And I like how the internals yesterday started to kind of change and roll over here. I'm looking at the indices profile heat grid within the scanner. Here's the daily situation. I like how this thing's starting to get heavy. I like how some of the shorter terms changed over yesterday. I'm going to pull up our 4-hour. This is the globe right now, and I like how this thing's shifting. Everybody's been euphoric lately. We've talked about 2200, 2220 possible targets on the S&P ultimately, but again, you've got some internals starting to change here. And I look at this not only, you can look at different indices across the globe and you can kind of say, hey, they're up today, they're down today, whatever. But when you start seeing the internals in a non-weighted fashion starting to kind of change tone here, S&Ps in general. Let's pull this up. I want to pull up. Actually, let me go back to the heat grid here for a second. When I can go directly. My computer's acting slow this morning, guys. I can go directly into our breath calculations by clicking on that meter there. And, we started changing over around lunchtime yesterday. As you can see that between 8 a.m. and 12 p.m. So let's take a look at the 60-minute just to get a little bit more bearing here. About 10 a.m. on the 60-minute. I think the 240s kind of crossed at the same time. And as you can see, that's kind of, where we started sloughing off here. And the daily is what's kind of interesting now. We started getting close to possibly more stocks trading below profiles than above profiles. That's significant. And if we get down to this area here, culminating into this statement, if we get down to this area here at 2152, and I think that's a foregone conclusion that we're going to visit that area. If that daily shifts over to, and we're going to have some change in tone here today. Remember, this is all based on yesterday's close, this daily. We're only up 12% on the breadth calculations. We're down a little bit this morning. Some stocks are going to shift over. If we get down to this 2152 area on our dailies and that breadth calculation from our weekly and dailies just kind of flipped, a little misdirectional there, I don't think you buy this. I like how this thing closed in the balanced area. I like how we retested it last night. We reached a high of 2171. That unfair high rounded off as 2170. I know this is a very thin profile. All things considered, looking at the globe, talking about indices alone right now, I think we could do a little bit of a flush here, shake some people out. So, again, I like how the internals are acting, how they're acting. Let's take a look at crude oil really quick. As we look at this, we talked about staying away from this until we got some profiles locked in, some things to lean on. I know we've rallied from below 40 to like 40, 50 this morning, but let's just take a step back, relax a little bit, and let's look at the bigger picture. There ain't nothing new really going on here. We talked about this thing before, piercing 40 just to do it. We're not really bouncing hard away from 40. Got into those 39s and change. You want to see this thing really get away from these whole numbers. these decade numbers especially. Here's the 240s. We talked about using this to regulate the trade down. And again, talking about 41.73, trend is down, 240s regulate. Now you've got 40.73. We hit that to the tick this morning. Excuse me, not to the tick, 5 cents off, 40.67. That's, if you trade crude, that's pretty daggone close. Nothing really violent wanting to get away from the 40s. So again, you've got to be looking at these areas as you look at these 240s regulating this thing down. It may not be over here. So again, the stronger signals will be the weekly and daily, having some new profiles to lean against, and our algorithm has not shifted that into gear, folks. I hear you, P. That's true. People don't really get it sometimes until you've experienced it on the wrong side. Things on their lows can go lower. Things on their highs can go higher. These, mean reversion things that people, it's kind of a fancy word for, things snap back to some kind of average mean normality. That doesn't have to happen. That's an incredibly difficult way to time things. It is what it is. Going back to gold here, we've talked about not getting off the long gas pedal. What a nice little scene this is. But I got to tell you something. Here we are. Here's that 2057 or 2050, 1359, 1360 area. We are there. We don't have to stop. But if you've had something off this long trade off the 1315 area that we've been talking about forever, this is the first stop. Okay? So 1359, 1360, we are there. Can you do a contra trade against that weekly unfair high? Yes, you can. But again, I think the riper trade here is to really say it's time to start scaling out of some longs. Let's wait a little bit. Let's see if we can gather ourselves. You got the 240s sitting here. If we kind of roll around above the 1353 area and kind of spin around up here, we may shoot higher than 1360. But you got to take these for what it's worth, folks. They're relatively powerful, as you can see, these profiles. So again, just a hint. 10-year. Market's not going to really like this. So you got to factor that in too when you're trading the S&Ps. I'm still, until told differently, still bullish on the 10-year. You guys know that if you watch this show. Here's the dollar. Going to hit this really quick. Here's that area that we launched off of before. Now we're kind of getting below there. Last week we pierced it. We closed below, got a new profile. I'm still not wanting to short the dollar. And, again, the long opportunities are not there right now. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I'm not familiar with something, a symbol that someone threw out in the den, JDST. I'm assuming it says 3 times. I'm sure Tom's extremely familiar with this. The Direxion Daily Junior Gold Miners Index Bear 3 times shares. So just because I just want to point this out, this is hopefully maybe can clarify some things, kind of the rope processes that I go through. And when I'm looking at gold, you know, gold to me is in a defined uptrend. And you know, when we reach inflection points on the upside, to put it simply, you know, it's difficult for me to, I get upset and angry with myself when I understand what the long-term MO is. Joey and I talked about this one day. It's almost like you want to keep some shares or contracts on just to remind you which way ultimately you're supposed to be trading this thing. So when you get up to this 1360 on gold, and this kind of, we're going to talk about JDST in a second. When you get up there, it's a target-rich environment for your longs. It doesn't mean that, hey, it's time to reverse the trade. You know, and if this thing blows through 1360, and I'm short, and I've tried to play around and squeeze some extra juice out of something, and you know, I've dragged myself into a whole new haunted house that I didn't want to be in and could have completely avoided, by the way. It disturbs me to the point where I almost have to walk away from the machine for that day and maybe even for a couple of days because I just did something that is against my core beliefs. And even though it works out sometimes and you can go, hey, I'm a winner, I get the girl at the end of the movie, it is really a low probability situation. And taking a look at the JDST and trying to reverse this based on the 1360 on gold, Paul, if that's who asked the question, you know, again, it might work out, but again, I think you've got just the trend momentum type thing in gold that you don't want to really disturb by creating this thing that, you know, may go wrong for no reason. So Paul, sometimes you got to sit on your hands and just kind of wait, and it's the most difficult thing to do when you. I mean, sometimes when I'm going to admit some things here. When I look at, sometimes I go, wow, I can go throw some money in a Nadex account and kind of rip it up for a while and maybe make, $5,000 on $100, right? So when you start kind of ringing the register, sometimes, I mean, there's a lot of things going on, and sometimes you try to create things that aren't there. And sometimes even trading, I think Nadex is a great product if used properly. But sometimes you just kind of have to say, you know what? I won. It's a boring situation. I took advantage of it, and I don't need to create excitement unnecessarily. And, one of the things somebody told me a long time ago, I've said this a couple of times, a guy just, whenever I start trying to create things, I always go back to what he told me in Chicago in the Board of Trade. Successful trading is supposed to be boring. And I know you guys don't want to hear that. A lot of people sit in front of this machine for the wrong reasons. It is specifically, exclusively to make money. It is not to, treat it as one of these things. So I hate to go and bring some dark clouds over trading for a while, but it again, I'm hoping you guys are listening, because been there, done that, and I know some of you guys have too. And it's just, try to make it simple. Don't complicate it. Tom, please stop. All right. Tom's actually joking, selling gold. But again, there may be some opportunities to short gold here, but if you're going to play around with something like this, trade it a little lighter, because, all things considered, the trend is up here, and you're trying to, again, if you get the high print, man, you get a gold star, but you're probably trading against the probabilities here. All right, let's get back on track here. So, and again, if I was pretty stubborn when I was in the board, looking back on it, if I had been a little bit more open-minded and kind of taken a step back and observed things a little more, patiently, I would have done myself a couple of favors. If Larry Pesavento is listening, and I know Tom is, that they could comment on this literally for weeks, that fact alone. All right. So going back into the S&Ps, we talked about this a little bit. Again, talking about probabilities, and I understand the trend is up on this thing, and when you look at the weekly, man, what's really looking like it's breaking down on the profiles here, there's really nothing, but you've got a little bit extra edge here if you have this scanner. And I like to look at this intraday. I love to trade futures based on 60-minute crossovers. We had that happen on, yesterday. You literally can look at 60-minute crossovers on our breadth calculations and pretty much trade futures based on that alone. These are the internals kind of rolling over or jacking up here. So we looked at this. I'm starting to, again, we're looking at our 4-hour calculations on breadth. There's some, Japan is not taking this new zillion trillion dollar yen, whatever, injection into the economy. It was kind of a letdown. And it's, again, countries having to basically go bolster their economy artificially. And there's some things kind of happening right now. Some, you have to, as a trader, you have to be willing to kind of accept changes and, not get stubborn about trades. And right now, you've got some harbingers of change going on here, to say the least. When you look at some of the globe, it's starting to roll. I look at that from a consolidated view, and I also look at the internals of the S&P. And I know we have a very thin profile up here, and I know the trend is up, and it's basically destroying everything I said on the gold scene concept. But you've got a little bit more edge here with, again, like a relative strength, relative weakness type situation, and looking at what comprises the S&P in general. And again, we're talking about a non-weighted fashion. Oh God, Larry's listening. I got to watch out what I'm saying here. All right, so here we go. I I want to take a look at, again, we're talking about possible market internals changing a little bit here. I want to look at some of these ETFs again. I try to review these relatively often. The XLV, again, had another big day up. We talked about some stocks internally inside the scanner. Again, you're talking about buying strong stocks and selling weak stocks. And if you're thinking that some of the internal, I can tell you what, we're getting ready to go to the commercial here, I believe. So when we come back, we're going to drill down into the XLV, and we're going to try to find some short opportunities in that particular sector.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys. Okay. XLV. So again, a sector that's just completely outperformed. And talking about, let me get this thing up here. Why is it not coming up? What in the heck is going on? Oh, there we go. Computer's acting weird today. So let's go into the ETF sector. Healthcare. So as you can see, again, the internals profile-wise, let's just go into the sea of green on the healthcare sector. There it is. There are some stocks that, just aren't exactly cooperating. Aetna's in there. I wouldn't call that really. So, you've got some opportunities here if the sector ever does turn around. And again, this is a little bit more higher risk trade. But stocks like Gilead, let's take a look at this one. Man, this is acting slow today. So, stocks like this one, if we can get rallies back up into 83.21 daily unfair lows and 83.46, so that general area, these are kind of the close below the sectors on fire, may lift this thing back up. This will be something you could look at from a sell side. I know you're not a broker, not a sell side broker, and there's a couple of Universal Health Services. This is an ugly scene. Perrigo Company, PRGO. These are ones, again, kind of on the theory that things on their lows can go lower. Ask crude oil traders right now. 89.72, the next edge of the cliff on PRGO. Now, when you start breaching some of these things, then anybody who's doing the crude oil kind of nibble on the low thing, again, has to cover. So, you've got some things going on here. These aren't probably like, hey, wow, cowboy trades that, the thing's gone up like 80% and you're hoping for a 40% pullback. Again, keeping it simple, boring situations. These are things that just, man, I mean, how'd you like to be in this thing as your star component of being long the healthcare sector and just, officially bottoming out there? Good Lord, that's an ugly scene. So if we look at, let's see, downtrend resistance on this sector, that stock is there also. So what I did is I chose downtrend resistance, and it's actually finding stocks in that particular sector that are meeting that criteria. And you look at PRGO, what we just looked at, it's the reason it's meeting that criteria is because it's sitting on these cliffs here. So that's the situation there. So, but the principle, I think you get it, and this is a great little instrument to find opportunities. I can't really see how I can operate the day without it, to be honest with you. And sometimes, what I'll do, and again, this is the S&Ps and the NASDAQ combined. If I go into instruments, what it does by default is it chooses NASDAQ and it chooses S&Ps. So if I come in here and I do a sort breakdowns, for instance, this is becoming a little more populated. That's another thing. This is another kind of indicator I look at in general. I look at stocks that are starting to get heavy and starting to break down on weekly and daily. So this really kind of, the sort is, it is what it is. You can read what it does. But what I'll do is sometimes I'll keep this up during the day. It dynamically updates. I think the worst case scenario, you're going to probably be behind about 2 minutes. This is being populated with real-time data. You are not paying for exchange fees on any level. And if you got like an account with a global broker out there, I'm not going to name any names, you can kind of look at these opportunities across 19 different indices globally with real-time price derivatives, and also throw in the futures and forex, 21 different sectors there. So as I look at this, a lot of times I'll keep this up during the day and I'll look for new things that kind of become populated. And by the way, I know we promised alerts for a while, but that has been an endeavor that's been pretty serious, and we're almost finished with that. So then you'll be able to kind of type in a formula for an alert, and it'll make some sounds and send you some messages. But right now, I'll keep these up. Like Tesla, this is our daily on Tesla. This is the weekly. This is where we were waiting patiently for Tesla to become an opportunity on the short side. We reached it, and we've kind of now migrated down below that 2033 area. If you've been watching this show, we've been saying, you know what, you're in no man's land. You don't have any opportunities yet. You got to get to 2033 or at least something a lot lower. we've reached 2033. We backed off, and that's where you can play defense now. I think this stock and this company's got a lot of problems in general. But again, now technically it's a ripe situation, and it looks pretty cool. Now, ExxonMobil, talked about this one in the ETF sector. Hold on. Here we go. So we talked about it coming down into this 90.46. That obviously didn't work out last week, and we reached another inflection point that we bounced off of a little bit, 86.87. That's been creamed. Now you got to look at this as a serious technical breakdown. We had a big profile appear above price action this week. Hadn't revisited it this week, but when the profile appears above price action, this happened on Monday morning, that's something where you don't try to trade this bounce again. This is a very big harbinger of bearish news when you see that. So on ExxonMobil, you know, you had some indications early, of course, on the breakdown, the regulation of the trade up on the dailies, but now you got to stay away from this on the long side at this stage. So a couple other things that are in the breakdown profile scene. Let's take a look at Verizon. This is our daily. Again, getting below profiles for the first time in a while. This is our weekly. Now, what this means to me, if the market can give us any help, this is kind of, again, not the weakest stock in the world, not like the PRGO, but kind of saying, okay, I'm not hip to what's going on with the market right now. I'm breaking down, and you may have some targets down south here, 52.21, to really revisit and still stay in an uptrend. This is a contra trade against that trend kind of situation. This is a stock obviously in a long-term trend up, but again, is it a relatively weak stock recently? Yes. Can you play defense on this thing? 54.80, yes. Stops above, and can you get a good risk reward trading it down into 52.21? What do they say on Ancient Aliens? They always ask the question and go, yes, yes, it's possible. That's what we're dealing with here. Okay. Let me read the den here, see how many people are on the verge of committing suicide after I speak. Okay, nobody, that's good. And we're going to be right back after the break here, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. So we're looking at Cardinal Health. This is one that I found on my own. Here's CAH. Now, this is a little bit scarier trade, so I don't want to drag into my haunted house here. But, you know, as the healthcare sector has continued to sky, this has obviously been something. Here's our weekly, kind of in no man's land there. Not a big wide profile in the weekly, so kind of ignoring that POC. But this is one that, you know, doesn't want to go any higher. So if you look at it in that sense, like, what have you done for me recently as the healthcare sector has moved north? This is one that, you know, if we get any pullbacks, you know, you could consider this something in the weak camp. So CAH may have given out a gas here. Where's your targets? Your targets are 78.80, and your defense is above 83.42. And looks like we're printing pre-market here. We're down a little bit. So, yeah, again, not an investment grade short, but a trading opportunity short. All right. So going back to the camp that we were in before. Let's see here. What I want to look at now is stocks that are trading below profiles in the weekly and have kind of rallied up to maximum points here. Let's take a look at Bed Bath & Beyond. And again, these are quick, easy, fast things to just kind of put in play here. And for guys overseas, you know, they like to combine their own indices in here. So if I throw in the, I know everybody's really high on the Bursa Malaysia. I'm just kidding. So if I throw in the Eurostoxx 50, it's also going to, you know, throw in opportunities on that sort. That's a pretty slim sort. Let's go into the Shanghai 180. So we're going to get a Shanghai stock there. People's Republic of China. What's not the People's Republic of China? Whoa. Anyway, Bed Bath & Beyond. Let's hit that. So again, a stock that's trading below profiles. Every time I go in this brick and mortar store, I kind of shake my head. But the market's kind of rally this thing back up into a place where you can whack it again, 44.84. Just put it on the radar screen, giving a little bit of noise factor there. A stock that's been in a downtrend relative to profiles in the long term and just kind of up at the maximum. Hey, I did it just to go into resistance again type scenario. So putting that on the radar screen. I really like that sort a lot. But what I like to do with that sort is just basically I like to keep it up during the day. And again, you can put a lot of these screens up at the same time on one terminal. So you can have a lot of different custom sorts going on. If you have, you know, real estate, if you will, you can keep these up, or you can, you know, you can kind of put them in little corners like this. Oh, I've got a 32-inch TV here that I'm putting this one on. I can't seem to move it. What did I do? Well, there we go. Okay. And you can have a couple of these sorts up at the same time, and then these candidates will dynamically enter the scene. So when I'm looking at Bed Bath & Beyond and I see any stocks that are kind of poking their head up into this area, if I'm looking to find some day trading opportunities, this is a nice little way to do it. This is obviously based on the close because we're not getting pre-market prints in the daily and weekly, but we are getting them in the 240 and 60. So if I come in here, choking on my own spit this morning here. Sorry. If I come in here and if I want to look at, let me restart this thing. I don't know it's my computer, but let me restart this, guys. I think all my RAM's used up here. Let me see if we can restart this. While we're waiting for that to restart, let's look at our currencies really quick. Again, the yen trade, something I've been following, not exactly what everybody was expecting. And we're down to that 101.33 area again. But again, I think you've just got to sit tight and look and wait now for the inflection point that we now have at 124.25. It's a little concerning that this thing is pulling back like it is. I was expecting actually a bounce at 105 and some change. Again, that's what stops are for. But this is similar to gold. We reached some targets, weekly unfair highs, pretty much to the tick. And now we're waiting for gold. Excuse me, we're waiting for the yen. I'm not a huge fan of shorting this, but I'll tell you what, because this is so, I think, unexpected by most of the institutional crowd out there, we might head lower just to get some people out of this thing. So I would be a little hesitant. I wouldn't go backing up the truck and getting deep on this thing at 124.25. Euro, still just kind of not a big fan of this trade on the north side, just still trying to keep the hedge on and just kind of hang tight on this one. No harm done. Aussie dollar. Again, we've looked at this one. Again, in the spirit of that kind of gold, let's stay with the long-term direction trade. Still haven't met ultimate targets up here. 76.76 is first stop, and then you've got on the weekly 77.46. Let's see if we got our scanner back up here. All right. I think this is my computer. Okay, so okay, we're moving. Sorry about that. Stocks that are in a strong downtrend. This is becoming more populated also. So, Walt Disney, let's take a look at this one. This is a nice little scene here. 106.7, excuse me, 96.90 unfair lows weekly. Really not participating lately with the market, just getting heavy. If the market heads south, a lot of these stocks that have shown their hand a little early could be just coming unglued. Love, we talked about this the other day. Again, this is literally what you want to see here. Right on the lows. I'm not a big fan of the double bottom, triple bottom situation. You've got a chance to play defense, and a stock that's just almost sitting on the launching pad to go south here. Any type of market disturbance on the south side, a lot of these stocks could come unglued at the seams. Checkpoint Software, ouch. Oh my goodness. Yeah, this could, here's pre-market, no prints yet. Let's take a look at that one again. Checkpoint. So 79.50 unfair lows on the weekly, 80.37. This is where we kind of had a dual time frame breakdown. Then we retraced back up and hit it. But again, I think this thing can go lower with any type of market help. You may have some nice little scenes there. Let's take a look at FMC Technologies, FTI. Some decent weak stocks out there, guys. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Hitting the XLU really quick. A little bit of pullback on the notes here. Coming down into support at 5165 on the XLU. There's still some great opportunities in that sector. Again, you want to be buying the strong always in a situation like that. Here's the, let me go back to the ETF sector. Let's look at the XLE really quick as oil is getting pummeled on a long-term basis. Here's the XLE. Here, ranking this by the daily, XLE obviously is no way around not getting hit. But let's take a look at the XLE on the chart here on E-Signal really quick. Finally broke yesterday below 66.47, but let's kind of see what is in the scanner here. Let's take a look at Southwest Energy Company. A little bit of a pullback on this. But, you know, again, still, you know, I think you look at something that is sitting around weekly on for highs. We kind of close above. This is not a big pullback, folks, in this little stock. Let's see where we're at. Nothing this morning yet. But I think you got a good little DMZ for support on this. Don't know if crude's going to bounce here, but again, you're trying to find opportunities. It's a relatively inexpensive stock. Trying to find opportunities that are hanging in there and not wanting to really come off. So again, playing the relative strength game, Not a bad little situation here. There's other opportunities in there. I think we talked about Slob the other day. Here's Schlumberger. Again, a lot of these stocks, really just spinning around up here above weekly profiles. And there's a couple other ones here we have talked about. Marathon, we talked about. Again, a stock that is really not doing too badly. CNX, not the worst thing in the world as oil has been getting crushed. Let's take a look at something else, though. Let's take a look at Diamond Offshore, DO. Now, we're coming down into another big inflection point on DO. 2059 has obviously participated with the oil coming off here. But again, you're coming down into a big inflection point. And on a relative scale, possible trading opportunity here. But again, you've got better longs, some of the ones I just stated earlier. Let's take a look at Halliburton really quick. Well, this is the, it's not the uncle area yet, but if you look at Halliburton, we're at kind of the Custer's last stance for a while on this. I still like how the stock is really acted. I mean, it's not terribly come off with oil. And if you look at this, it's a nice little pullback off the highs, and profiles have edged higher here. That's one thing to keep in mind. So not a bad situation. ConocoPhillips, this is one you want to stay away from. Not exactly, been outperforming like some of the other oil stocks, but I think you've got better opportunities out there than that one. Guys, thanks for the comments this morning. Stay tuned for Larry and all the other hosts on TFNN. He's going to be next. Then you've got the rest of the lineup. Get some good information here today, guys. We've got some things that could be happening with the S&Ps. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.